Hello, everybody. Happy Sunday. Who is ready for a Sunday stroll into the Alpha Wood? Just occurred to me as I'm sitting here with you all. We'll be talking about pairs and correlations and arbitrage and models and why some investors and day traders are not successful. Common mistakes. We'll talk about last week, I think I spoke about the pair trade of the century or the decade, which would be more Tesla, Bitcoin stuff as well, and so much more. We'll also talk about a brand new wallet as well, kind of a hot wallet for Web3 stuff. So thank you all for coming. Let's go. And it's hot today, really hot, record high temperatures. So if I look like I'm melting, it's because I am. Let's get into it. And this is, of course, not financial advice. All the questions come from Patreon. Shout out to everybody in there. And this set of questions this week was super interesting. So without further ado, let's jump in. First question is from Saddle Monkey. Last week, you discussed the pair trade of the decade, Tesla and Bitcoin. Most of my assets are in an IRA, so flipping between Tesla and spot Bitcoin is not possible. Do the ETFs get similar returns on price appreciation, or is there another strategy that you were referring to when you said you would be trading this pair in earnest with your newly found retirement account? Thank you for all you do. Thank you, Saddle Monkey. Let's jump into this. And yes, the short answer is it's not a disadvantage, and there are other things you can use as well. Let's look at Bitcoin versus FBTC, which is the Fidelity Spot ETF, as a correlation. You can see here it is extremely correlated. We'll be talking a lot about correlation today. But as you can see, it's most of the time it's at 1. Sometimes it does deviate. And when things deviate, that's when, for example, a deviation is happening right now as you speak, because Bitcoin has hit 62,000. And the close of business on Friday, let me get the exact price when the market closed last Friday. Bitcoin was about 60,000. Whoa. 60,300. So it's up $1,700 higher than the closing price. And because markets are only open for 6.5 hours, 5 days a week, in fact, this week coming, the markets in the US are closed on Thursday. It's some holiday here in the US. So be ready for that. It'll be a short week, but also an action-packed week. I'll do a post later on Patreon about that too. But more importantly than the Bitcoin FBTC correlation, we have to look at this chart too. This is the number, and I have a model on this, the number of actual shares per Bitcoin you need to have if you do hold FBTC. And what's super interesting about this, you can draw a line that goes directly through the actual price. This chart is Bitcoin divided by FBTC, and the result is between 1,142 and 1,143 shares per Bitcoin to be a whole coiner. And you can see that spike. All those spikes are in after hours, but the rest of the time, the price is bang on. So the short answer to your question, hey Kiwi Robin, good to see you, buddy. Sean Donnelly and TD Tesla and K8, the whole crew is here. Where's American Beijinger? He's missing. Anyway, conclusion, absolutely. You can pair trade away with spot ETFs. I like the Fidelity one. I trust them the most. And I'll be coming up with the new models as well, and there's a follow-on question related to this too. So, next question is from Super Cali. Hello, James. I'm in a 2x leverage position since day one of the ETFs hit the market, 42,000 euros. My plan was to have an additional whole Bitcoin or more, but I thought we were getting there sooner. But I'm a bit worried that I spent too much because every day it costs me 100 euros. In my head, it's a good idea to deal with works, but is there a balance? Should I find out about getting out? Earlier, you mentioned you don't like to be in leverage for more than 3 months. In fact, I don't like to be in leverage for more than 30 days, but we'll get to the rules. And a lot of people fall into this trap. It's called, I'm having a brain fart for the name of it. It's like as perpetual loss, or a loss that you just incur when you use leverage ETFs. Now, remember, there's different types of leverage as well. You can use margin. I don't mind using margin to buy a stock. Borrow 50% at say 5 or 6% for a year. That's fine. But with these leverage ETFs, it's different. Let me spell out the problem. So you're in a 2x leverage ETFs. The ticker for this is actually called BITX. And you've been in this position since the ETF launched, so you're there 6 months. Your daily cost is 100 euros. So over a year, you are spending 36,500 euros, which is more than $40,000 just to hold this position. And it gets worse, unfortunately. Another pair chart. Remember, I always say everything's a pair. There's a funny image floating around of me. I'll dig it up with just some pairs. Anyway, people do all sorts of weird things on the internet. But this is BITX, which is what you have, divided by Bitcoin. And you can see, since the ETFs began, it's down 9.96%, despite the fact that Bitcoin is up. That shows you that you are getting clobbered holding these leverage ETFs. There's a reason I don't buy them. If I buy them, it'll be for a very short window of time. My preferred window for holding a leverage like a Perp or something is 10 to 30 days. I was in a Sol Perp. My mistake was wrote it perfectly on the way up. It nearly did on the way down. I didn't, and I should have. And then last night I got a buy alert again, but I was too busy watching 303, if anybody knows what that is. So I didn't get a chance to get back in. I was like, ugh. But you know, it was worth it. Anyway, when you look at this chart and you have an asset that's going up since January, and when you compare that the performance of your BITX to Bitcoin, you're down 10%, you scratch your head. And it's called impermanent loss. That's the word I was looking for. Impermanent loss. This is what's happening. This cost is eating you alive. Do not hold anything more than 10 to 30 days in these instruments. They will kill you. So what can you do? Again, leverage ETFs like BITX are designed for short-term trading, not long-term holding. And remember as well, some investors make mistakes. They buy things and then they forget about them. And they think it's okay to hold for a year, or they'll come back a year later and say, what happened? Don't. Always, if you are actively investing, always keep an eye on your bags, always keep an eye on the news, always keep an eye on the chart. So here, again, as I mentioned, since January, BITX has fallen 10% against Bitcoin because the fees are eating you alive. Not that Bitcoin hasn't performed or BITX hasn't performed. It's doing what it's supposed to do, but it's for short-term trade when you need a little bit more oomph in your buy. Thank you, Dr. Sauce. And I can't stress that enough. Never more than 10 to 30 days. And so, thank you, Super Cali. Sorry about the bad news. Get out of the position ASAP. Next, Ronaldo. Hey, James, you mentioned last Sunday's Q&A that CleanSpark isn't correlated with Bitcoin. Shouldn't a proxy be correlated? Great question. Everybody's talking correlation this week. I love it. I love it. It's so important to look at. Let's look at, again, another chart. This is CleanSpark divided by Bitcoin. And you can see it's a bit of a wavy, but the top price is Bitcoin. And you can see we're about to break up from a downtrend on the 12-hour chart, by the way. This is not a daily chart. It's not a 4-hour chart. It's a 12-hour chart, but it gives you a better perspective of where the correlation has come from since the beginning of the year. Thank you, a bottle of red. You can see some of the time it is correlated. Only 2 times for about 2 days was it nearly perfectly correlated. That was the 2nd of May and towards the end of May. Other than that, no, it has not been correlated at all. And that's the beauty as well, because sometimes knowing things that move in kind of the same general direction during a bull market, but at the same time, there's lots of volatility, it can be very exciting to play. Now, there's things happening behind the scenes with a lot of the miners right now that you have to bear in mind. First of all, they're doing this thing called ATM, which means they're using their business like an ATM, which means they're issuing stock. So there's dilution. So when a stock has more shares, there's dilution, which puts downward pressure on the price. As Bitcoin doesn't have dilution, there's a little bit of inflation, but most people, it's not like an ATM issuance of some of the Bitcoin miners right now. That also plays into this too. And also there can be news cycles, news releases, fear, especially a lot of post-halving fear. If you look at this actually post-halving term, coincidentally, ever since April, it's been very volatile, especially that massive dump of lack of correlation. I guarantee you between the 10th of June and say the 25th of June, a huge amount of stock was issued. Pretty sure of that. And I have a model to calculate that. I'll calculate that later. I'll share it on Patreon because I need to look at that myself. It just occurred to me. So thank you, Ronaldo, for the question. Next question is from Honey Badger. By the way, I'm tackling more questions faster. I hope that's okay. If you want me to do deeper, longer, let me know. But I'm trying to cover as many bases as I can to answer as many questions as I can for you all. This is from Honey Badger. Bitcoin cash and carry trade has clearly impacted short-term price action, and with funding rates now decreasing, the trade is no longer profitable. Does the unwind by the hedge funds? What market conditions cause funding rates to rise or fall, and how can we monitor these, and when will they increase again? Woohoo! I love this. Let's go. So this is a comprehensive list, I think, which are ranked in terms of importance of why I believe what causes funding rates to fall. The opposite would be true as to what causes funding rates to rise. I'm going to rattle through this list and then show you yet another chart to show you how to determine if something is unwinding or not. First of all, bearish sentiment. When the overall market sentiment becomes bearish, funding rates tend to decrease and can turn negative. And this typically occurs when traders expect the Bitcoin price to fall in the near future. And then you got market corrections or pullbacks, sharp drops or corrections in Bitcoin's price can lead to funding rates, a decrease in funding rates as leveraged long positions are unwound, i.e. they are closed or they can be liquidated due to extreme volatility. And as I've covered many times, Bitcoin isn't as volatile as it used to be in previous cycles. Now, the third part is a reduced demand for long position. So there's less speculators when people think the price isn't going to pop. They do this for the summer doldrums. As demand for long positions decreases relative to short positions, funding rates tend to fall. And this can happen when traders become less optimistic about Bitcoin's price prospects. Now, another one is what I call when there's no price alignment between futures and spot markets. Remember, the funding rates are designed to keep the price of a Perp, which is a perpetual futures contract, aligned with the spot price. But when the futures price is traded at a discount compared to the spot price, funding rates can turn negative. That's when things get out of sync, and that's when the markets get messy. That's when you can have cascading liquidations, etc. Then there can be a change in trader behavior. Maybe a lot of bad news, people read stuff on Twitter, who knows. But when traders want to start to favor short positions over long positions, it causes funding rates to decline. The reason, by the way, long positions have positive funding rates is people want to pay a premium to get that leverage exposure. And then you have an overage leverage market condition. When the market becomes over leveraged on the long side, a subsequent correction can lead to a sharp decrease in funding rates as positions unwound and as liquidations happen. I'll show you the chart to identify that exactly. Then you have reduced market liquidity. A decrease in overall market liquidity can lead to lower funding rates as there's less capital flowing into long positions. And sorry, it's a long list, but there's many reasons for, and this applies to all markets too, by the way. Then there's increased risk aversion during periods of heightened market uncertainty or risk. Traders may become cautious, leading to lower funding rates, i.e. they leave the market basically. And then regulatory concerns, government's going to ban Bitcoin. That can make funding rates to fall because people leave their positions. And then post-halving doldrums, which is what we're in right now, Bitcoin experiences kind of a quiet period, 90 days after the halving. And that's exactly what we're seeing. So depending on the time, the bull, the bear, the season, the post-halving, after a big spike, all of this comes into play. And that is the most comprehensive list I've ever put together to answer this question. Now let's look at the chart. Your second part of your question was, how do you identify this from happening? So here, this is actually the top and bottom indicator. It has about 20 indicators in it. You can pull up the perp rate live and watch it monitor over time. So if you look in the past, we go back to October 10th, 2022. Funding rates were through the roof. And what happens after that? Boom, market crashes, price goes down. Same thing with end of April, May 2024. Funding rates went through the roof. And then, boom, big unwind. Cascading liquidations, price tanked down to 58,000 or so from coming off the all-time high. The anomalies in the data, ignore those spikes. Sometimes there can be a very short-term spike because of a big market manipulation, but overall, that is kind of the trend, and that is how you monitor exactly what's going on. Thank you, Honey Badger, for the question. Next question is from Steve G. Hi, James. I'm a subscriber to the full IA suite of tools and have to say they have helped me tremendously, and I have learned so much using them. Beautiful. Thank you so much. And it's about 35 years of thought went into these things, so I'm glad you can learn from them and you see how helpful they are. However, you often come up with other opportunities using the tools. For example, Tesla Bitcoin trade on the daily ATR, and I find myself thinking I'm missing out. Classic FOMO. With so much potential within the tools, how would you approach the markets as an intermediate investor trader using the tools right now? Spot pairs. Thank you, Steve in the UK. So these are all of these things are created to solve problems I've had over my life. So things like mean reversion, things like back testing, things like, custom trend models per asset, all that type of stuff. Everything has a special purpose. And I always stress for users to find their rhythm. Absolutely critical. You got to find what you like to trade, what you're interested in, what your time frame is, what you like to do. So here's an example of how you can use everything, because I use everything all the time, but for different purposes. So for example, I use ATR to get a feel. I think I showed it up here, or I'll show it later, the ATR model on another question, to give me a macro perspective of where the asset is in terms of layers, in terms of momentum, in terms of support resistance levels. And I use that to kind of give me a picture over a year period or so. And then I use other tools for short-term stuff. So I put together a little kind of like a day in the life of how I would build practical steps to use the tools for different things, and again, to find your rhythm. So begin each day by checking the outputs of the ATR model to get a sense of the macro trend and volatility levels. Find out where we are. Are we breaking out? Are we at support? Are we at resistance, etc.? Then, for entries and exits and hedging positions especially, use the Lila model to layer in and out of assets based on identified support and resistance levels. So, for example, if I see something coming up against resistance, could be hypothetically Tesla 200 to 210, that's a time after a little spike, maybe to hedge, sell a call option out of the money short term. And I use the Lila model for that. Then you got your pairs trading. You monitor pair trading on steroids for significant deviations. I use pair trading on steroids to go long and short Solana right now on Jupiter. And again, I use perps, and I use them only, I try to get out of the trade within 10 days. And so far, it's working well. Do not hold these perps long time, just like don't hold leverage ETFs long term either. And again, find the pairs that you like. Also, Bitcoin and crypto. To find out where Bitcoin is, I use the top and bottom indicator all the time to also determine when it's oversold, when it's overheated, when it's getting toppy, when to take profits, when to rotate, etc. Then I use DCAS model for ongoing accumulation when I want to stack something, like heavy stacking of Tesla, which is what I've been doing now for nearly a year and a half. But I'm optimistic. It's kind of my long-term bag. A lot of spare cash goes into things like Solana and Tesla right now, a little bit into Bitcoin, and a lot into proxies like miners and MicroStrategy. Then I use the macro model to find out exactly what's going on with the macro world. And then arbing. I use ArbCloud for short-term opportunities between Bitcoin and proxies like MicroStrategy. That's what, as I call, the gift that keeps on giving. So that's kind of like a roadmap for what you can do and how you can use all the different tools. Now let's look at, where am I now? I don't even know where I am. Well, that was the end of the question. But I will touch on ATR and some other models now coming up as to how they can be used too. So stay tuned for that. And thank you for that question. And by the way, one other thing, sometimes people use combination models with different things. So there's one person that uses signals from PTOS in combination with optimized trend and other products. So again, find your rhythm, play with them more, find what you like, and then keep working at it. The way you get really good is not trying 100 different things, 100 different ways, 100 different times. It's like, I think it was Bruce Lee said, you don't want, I'm going to completely butcher this, as I butcher everything. He used to say, you don't want to fight a guy who's practiced the same punch like 10,000 times or something like this, the same strike. But this is what you want to do in trading. Find your method, find your rhythm. Like I did that with covered calls in the 90s, and then enhanced the strategy and the models and the methodologies and the timing and my patience and the charts. And then it just becomes an infinite money printer. But again, I urge everybody, practice like Bruce Lee. And if somebody knows that original quote, let me know. It's just words to that effect. You don't want to fight a guy who's practiced the same punch 10,000 times. Anyhow, next one is from Chasing Dreams. And this is also tied to a lot of the previous stuff. And it's so, so important. Why is an investor so mentally feeble that he always makes mistakes and loses money? What should we train our investor mind to get long-term success? This is absolutely critical and so important. But let's look at a little bit of data first that came across my radar this week, coincidentally. And a lot of people should be looking at this and talking about it. Now, I always say be in the 1%, but that means the 1% of everything. Be in the 1% of knowledge, be in the 1% of skill set, be in the 1% of assets. Always have the mindset of being in that top 1%. If you are not in the top 1%, go do something else. But there's ways of getting into the top 1%, so don't lose hope. So first of all, this is a cool little stat here. This is from quantifiedstrategies.com. And these are some day trading statistics. And I know it's day trading, but it's a very comprehensive study. And this also, I guarantee, has parallels with crypto traders as well. Not necessarily day trading, but remember, if you're day trading stocks, you're up against pros. Okay? And if you're not equipped with tools and methods to beat them, you will lose to them. Remember, it's a zero-sum game. Let's break this chart down. First of all, very high failure rates and 40% quit within a month. This indicates a very big dropout rate, suggesting that many day traders find the activity more challenging or less profitable than expected. They don't have the dedication or the aptitude or the tools to succeed. Only 13% remain after 3 years. Again, it highlights a huge long-term attrition rate in day trading, with only a small fraction continuing after a few years. Even more startling, from FINRA, 72% lose money annually. All right, a lot of people say they're good traders and everything else. Yeah, they're probably not. Very few are good. You got to be in the top 1% to be the best. And a substantial majority of day traders are not profitable on a yearly basis. They might have one win every now and again, or get lucky on a meme coin, or get lucky on a stock or a call option and short term out of the money. But over time, they lose. Time is so important in investing. Also, very low long-term profitability. It's probably the most stunning stat of all. 1%. All right? I always say be in the 1%. That's why I found this study so astounding. 1% consistently are profitable after 5 years. The statistic is particularly alarming as it shows that only a tiny fraction of day traders manage to consistently be profitable over the long term. All right? Investing is a blood sport. All right? It's you against me. All right? Zero-sum game. So if I'm selling a call and you're buying it, ask yourself, why are you buying it? Very important. Now let's get into the other part of your question. Why? Why do investors fail? And first of all, there is no proper education or preparation. They hear somebody pretending to make $10 million in a day on a trade or whatever. Very few people actually do that. All right. They also have no tools and they have no process. They just have a random scattered approach. Remember the Bruce Lee example I gave? Practice the same thing 10,000 times. All right. Don't try one thing one day, another thing another day, etc. Find your rhythm. Find what you like to do. Find what you're good at. Win 80% of the time. And then keep repeating. and refining and getting better and better and better. That's the way you win. You do not win being haphazard. The investors have no idea of their blind spots. It goes back to the point you made here, that is mentally feeble. I wouldn't call it mentally feeble, but some people aren't aware of some of the issues they have. Like one example, people get very attached to money. And I think the less you care about money, the more successful you are. If you don't care, you're not nervous and you can weather any storm. Also, you got no fear when you run into burning buildings, when things are really down and everybody's really afraid. They are my favorite times, okay? Because I'm not attached to money. I don't care about it. So I have like a fireman who will just run into that burning building, putting his life in danger. It's just weird, weird thing. Anyway, emotional decision making too as well. When people are attached to money, they get emotional and they can't make rational decisions. Therefore, you need to leave your emotions at the door. Also, poor risk management. We have another question coming up around options. Options are brilliant, not only for amplifying gains, but also managing risk. Absolutely perfect double-edged sword for your benefit. Also, unrealistic expectations. And we still see this a lot in crypto. I had a question once from somebody. They said, hey, I've got $10,000 or $20,000. I need to turn into $1 million in 12 weeks. Tell me how. And when you go into the markets with that type of expectation, that $10,000 or $20,000 you have that maybe took you a long time to get together will be gone. Okay? So do not have those unrealistic expectations. Finally, insufficient capital. It takes money to make money. The more money you got, the more money you make. The old saying is, the hardest money to make is the first $100,000. And once you make that, you get to $1 million really fast. And once you get to $1 million, you get to $10 million really fast, and on and on and on. So remember that it takes money to make money. So if you are building that nest egg, be very risk averse. Very risk averse. You protect that until you have a substantial egg. When you have a lot of money, then you can take on more risk. So remember that too. And part of what we're doing, and we've been working on this for years, but it's getting real close. And I feel sometimes a bit like Elon Musk promising FSD. I said it'd be out early 2024. It's coming out. This is the IAIP, the IA Investor Profiler, a free little survey to help you identify exactly what your blind spot is, what your weakness is, and how to fix that blind spot. Because I learned this from reading one of Ray Dalio's books, and that was probably the most important thing in that whole book, is the best investors know their weaknesses. Not only their strengths, but they are far more aware of their weaknesses. You got people out there that are so-called professional traders on CNBS all the time. You can tell they're emotionally not stable, like Ross Gerbil and people like that. Who would ever trust them to manage money when you know they don't have the right mental fortitude to be successful? That's why I'm building this. Anyway, let's move on to the next question. Promise it's coming, but it took a long time to build. George, 69. Hey, James, I have a combination of Solana and Bitcoin, plus some Sol alts totaling around 60,000 British pounds. By the way, not too long ago, 60,000 British pounds is worth about $100,000, but I think the British pound has gotten a little bit weak over the past decade. Anyhow, you've been talking about when to reallocate other assets. If I sell everything now and go all in on Tesla, there seems to be a lot of upside over the next 3 to 5 years, given the recent modeling you have done on Tesla. Is it too early, or should I wait for the next Bitcoin pump to buy Tesla while it's below $200? I have done some Tesla already. I have some Tesla already, but I want more. So everybody should have more. And there's nothing I think more about. Nothing since 2017. It's the timing of that rotation, that pair trade. How long do you ride one horse before you flip into the other? And also bear in mind things like tax ramifications and, I try and avoid short-term selling because it's a real issue. Now, what probably got a lot of people excited, I shared this chart last week. By the way, last week, Tesla was at $177. This week, it's at 200. And Tesla has far outperformed to the tune of 20% Bitcoin in the month of June. Tesla's gone up, Bitcoin's gone down. All right, this is an example of a pair trade, but it's very hard to nail that over the short term. So one of the things to do, we have two big things coming up. Again, they've taken years to build. One is a profit-taking optimizer based on your cost basis, based on your asset, based on models. It took, again, a long time to crack the code in that. And I know there's people out there who'll think, I can reverse engineer these things. No, we got 3 data scientists being hammered by me for years to crack the code in this stuff. It's not trivial at all. But this is the thing here, just a reminder of this chart. If my models are right, and I'm not even taking into account other models like Kathy Wood, ARK Invest, and her team, the work they've done, and many other experts. But I see from the price point here, 177 to Bitcoin being 66.7, at that price point, by the year 2032, averaging of all my models, I think Bitcoin could do a 9.34x, which is astoundingly good return, but Tesla could do a 27x. That's the difference. More than 3x return from Tesla out to 2032. But the problem is when and the volatility of these assets. Again, a week ago, $67,000 Bitcoin. Now Bitcoin's at 61,974. Exactly. And Tesla's at 200, and here it's at 177. That's how they change. Bitcoin is so volatile, Tesla's so volatile. But there will come a point. Tesla sometimes it's typically quiet for 3 years between what they call big growth spurts. And we're coming to the end of that quiet 3-year period. So that was the time to stack. Now, not only do we have a profit-taking model, we have a rotation model we're working on. And this is not the model. It'll be separate. It'll be a web app. But this one shows you the pair of Bitcoin divided by Tesla on the daily, on the ATR model. And what's crazy about this is the range of the number of shares of Tesla you get per Bitcoin over the past couple of years has gone from 60 Tesla shares per Bitcoin to 850 Tesla shares per Bitcoin. We're currently at 306 Tesla shares per Bitcoin. And Tesla has a ton of tailwinds, but Wall Street, and this is the key part here, Wall Street will not, the problem with Wall Street is they have car analysts that look at General Motors and Ford, stuff like that, but they don't know what to make of Tesla. That's why 47% of the investors in Tesla are retail, because they see the opportunity, because they are smarter than Wall Street. And Wall Street will not be able to understand Tesla until they see the results. We're getting in before the exponential results. And that's the beauty of us being here and running circles around Wall Street. Okay. But again, look at this model here. This will help us identify when we swap. Now, it's even more extreme if you look at MicroStrategy Tesla, number of shares. That ranges literally from 0.8 to 12 or something in like 1 year. It's bonkers. Anyway, moving on. We are working on that. The key is, I think, crypto could run faster over the next 6 months or so, till about 2025, and then it'll be game on. All right, I think we have a lot of time. I think on 8/8, Tesla could unveil the most beautiful modern robotaxi that drives itself on stage, picks up a passenger from a mobile app, and drives off without any wheels or brake pedals or anything like that. And Wall Street still won't understand it until they see 2 million of them on the road that are making money. And they don't understand the energy business, and they don't understand FSD and SaaS models and all that type of stuff. That's the problem. But at least I think it was Adam Jonas from Morgan Stanley said on Friday, he thinks bots will be bigger than anything else. Yay. We've been saying that for years. Anyway, we got time. Hold tight for now. I'm starting to do gentle reallocations and hedging, but watch this space carefully. What I'm doing is offloading NVIDIA first into this, and then other assets too. And then the last thing, maybe, if I even ever sell it, will be Bitcoin. So hope that helps. Next question. So I just want to say, this is a very, very deep Q&A today. So if I'm talking too much, I promise I go fast, but these issues are too important. And this is the first time Mauricio has posted. Welcome to the community. For those who do not know how to trade puts, calls, options, etc., what is the best way to get into this new world? Do you have a training program? And if not, your recommendation to learn how to use these tools and take advantage of your models. Thank you. Thank you, Mauricio, for coming. First of all, everything I know about options trading, I've put into a video playlist, and it's here. I've got playlists on everything, by the way. So if you want playlists on macro or you name it, personalities, specific assets like Tesla, there's a playlist for everything. So that's first of all, it breaks down all of my trades. And then in real time, every single move I make, I post on Patreon. And I show you exactly why I do it, how I did it. And then I do postmortems of trades and options trades as well. But sometimes there's so many trades, it's hard to keep track of. But watch those carefully and look at the reasoning behind how I trade, and I use the tools for every single trade. So I, got out of a perp earlier this week because I felt it was very toppy, etc., etc. Now, let's. I don't do courses. You go to other people that sell courses. I don't sell courses. I just show you how to do stuff, and that's the best way I think to learn. Because the other danger is sometimes if you do a course and tell people what to do, they can still make mistakes and misinterpret it. So I think it can be very dangerous. But if you have the dedication and the aptitude, go through this playlist, go through my trades, see what I do, look at the breakdowns, look at the history, and then that's all you need. So hope that helps. Puffin. Let me see. You don't like L2 chains and bridges on ETH as they are band-aids? Yes, they are. Vulnerable to security issues. Is NOS, which is Nosana, not an L2 for render? Question mark. I like the simple question. No, first of all, Nosana is not an L2 solution for render. Rather, Nosana is a decentralized compute power platform that partners with Render to provide AI inference capabilities. And layer 2 solutions are specifically designed to scale Ethereum by processing transactions off the main chain and still hoping they can derive some security from Ethereum. And they aim to address, of course, Ethereum scalability issues because 15 TPS ain't going to cut it. And so there's absolutely no commonality. And everything that Solana does is simply on-chain. So hope that helps. Next question. Gavin L. Hey, your thoughts, please. He must be a Tesla shorter, LOL. Mercedes is humiliating Tesla. Musk is losing the self-driving race by Will Lockett on Medium. So, things like Medium and Seeking Alpha used to be great. Now they're just people that are just trying to promote their own bags or positions, or they're paid to be a psyop by other big firms. This theory is that it's far-fetched, but I've read it on the different places that there are different organizations that fund terrorist attacks against Tesla in certain markets. I won't say who they are, but there's a lot of interesting connections in the back. Let's talk about another guy. I've never heard of this, whoever that person is on Medium. Not even going to mention the name. Don't give him oxygen. But there are so many psyops in this space. This guy, Per Lekander, he is a clean energy transition CEO. Okay? He is on CNBS and TV all the time. All right, I'll repeat that. He's a clean energy transition fund manager. Clean energy. It doesn't get much cleaner than Tesla Megapacks and Tesla EVs, despite the crap you'll hear out there. Okay. For some reason, this guy, let me zoom into him so you can see him, and even his face can tell you he's not comfortable saying what he's saying, but he believes Tesla will go bust. He has a price target of $14 per share, and he just gets on TV all the time and says terrible things. However, when you go into his fund, all right, he has been short Tesla by buying puts since 2020. Short. He's losing his shirt shorting Tesla. And he's gotten into this, what I call bearish mentality trap, where he can't think about anything else. Either he hates Elon derangement syndrome, or he's sure he's right, or he's been losing for so long he's brain damaged, and he keeps on doing it. But the fact that he has a clean energy fund and he pretends he's holier than thou on TV when this piece of shit is short Tesla and he's trying to talk it down to pump his own bags, rest in peace, mofo, idiot. And this is just one of them. There's hundreds of these guys, okay? I just bring him up because he's the most desperate when you see him on TV. Idiot. Anyway, let's talk about Tesla versus Mercedes and their FSD. I didn't read the paper on Medium. I do not poison my clean brain with garbage like that, but I will break it down very fairly, the difference in autonomy levels. On the left, I got the pros. On the right, I got the cons, and this is very objective and fair. So first of all, Mercedes have a pilot level 3, and it says it can handle all driving aspects, but only under extremely narrow conditions. You got to be on a freeway. You got to be in traffic. It's got to be good weather. You can't go above 40 miles an hour. Okay? If all of these things hold, it works. That's it. It's absolutely limited. It also only works on limited roads. Okay? With high definition maps. It also uses expensive LiDAR, which isn't going to scale unless you have 200 grand to spend on a car. Whereas Tesla systems are designed for the broader environment, work anywhere. They'll even drive you to the middle of a field if you drop a pin there. There's no nag on version 14. And the market perception is anybody who has a brain knows that Tesla is the clear leader in advanced driver assist systems out there. Strong brand and reputation, safety record off the charts. And the Mercedes stuff only works level 3 in Nevada and Germany. Limited parts of those places, though. Talk about super limited. It won't scale, whereas Tesla has a huge fleet gathering billions of miles every single month or so. And both companies are making progress, but MERC's method will not do it, okay? There's no point in having a driver system that has so many stipulations on it. It's just complete BS. Smoke and mirrors. The cons, both are not fully autonomous yet. One is coming real close. Level 2 systems require constant driver supervision. Mercedes, as I mentioned, good weather, highway, 40 miles an hour. In traffic, it can follow in very limited roads, etc. It is a very expensive multi-sensor system. And yeah, it's just noise. The whole LiDAR thing isn't going to work. Neural nets with baby AGI and cameras like a human, what Elon has done is replicated the way we drive. We have eyes and a brain. The car has eyes, which are cameras, and a brain. That's it. Bitcoin just broke 62,000. Woohoo. So, yeah, it's whoever that guy is, I bet you he's short Tesla too. And by the way, it's going to be fun when you see the faces ripped off all these shorts, because the time will come. I don't know if it's in 6 months or a year and a half, but it's going to be glorious when the day comes. Next is from Stoic Rise. Being as safe as possible in mind, what does the wallet team think of NUFI to stake Solana through Trezor? I have my bags being staked through Trust Wallet for the open source aspect, but I'm looking for better alternatives. So let's dig into this one. And yes, big shout out to our wallet expert in the team. He is awesome. So NUFI is a Web3 wallet that provides non-custodial a platform for managing staking and trading digital assets. Remember, Web3 wallet, which means it integrates seamlessly with hardware wallets like Ledger and Trezor, enabling users to manage their private keys offline, and it lets you stake directly from your hardware wallet. This means you can stake without having your crypto leave your hardware wallet. And it supports a variety of different tokens as well, and even things like NFTs. Features, a few key features to be aware of. One, it's a Web3 wallet. It's compatible with different blockchains, Solana, Ethereum, Flow, Polygon, Optimism. You can also stake with Solana, which is key. It's also multi-chain NFT compatible and able to connect to dApps and DEXs on multiple chains. And its integrations certainly are impressive. So thank you for bringing it to our attention. But there's more. Staking Solana on NUFI. It seems very straightforward. It lets you earn 6 to 7%. Flow is about 8 to 9% return. NUFI does run its own validator, but they take 0% commissions, which is great. However, according to Solidex, this validator has been noted to have a higher than average skip rate, which could impact the rewards. So watch for that. And the really good part about NUFI, though, is they don't force you to use their validator. Instead, you can pick your own validator and staking pools when you stake. And it's made by a group called Vacuumlabs. And it's funny because they were founded in 2018, and they originally developed ADA Lite, which was a first wallet for Cardano. But all of the team members came from ADA Lite, and they've kind of pivoted to something better. And it has backers as well, like NKB Ventures. And remember, though, it is a Web3 wallet, which means you don't need to store any crypto on NUFI itself. Instead, your crypto is secure on your hardware wallet, Trezor, Ledger, etc. And it's great for Web3 because it means you can interact with dApps and everything without your crypto ever leaving your hardware wallet. And yes, this is a better option than Trust Wallet, since Trust Wallet is a software wallet that you would effectively be leaving your crypto on a hot wallet, and we do not advise that. So this is one of the rare wallet reviews where we didn't find anything bad. So yeah, go for it. Test it first. And favorite part of the week, helping animals. This is Missy. She's a capuchin. And this week we donated. Missy's an 8-year-old capuchin who came to the sanctuary after being released from a Texas home and loves fruits, especially mangoes. We all like mangoes. Everybody likes mangoes. And tomorrow morning, 7:40 a.m. Pacific, 4:40 Central European Time, we have DCA. And always a good show to kind of get ready for the week. Thank you all for coming. I'll now open up to some live questions from the audience, and a big thank you to the mods in the chat too. And let me see. Markets are looking good. Woohoo. Wow. Very good indeed. Certain select names are moving very nicely. All right. How long have I been talking? 50 minutes. Whoa. Let's jump into the questions. Doc Intern. I'm on call this weekend. Doc is a doc. FSD in my Model Y drove me around multiple hospitals for 3 hours each day. Zero driving fatigue. Private chauffeur for $99 a month. Game changer for these long commutes. Tesla. Can you please take a quick look at the NOS sol chart to see if there's a good ARB opportunity? I can. Doc, I will post that detail in a chart on Patreon later because I can't pull up the chart right now live from where I am. I have been looking at the performance, though. When you look at NOS over Sol, Solana has outperformed all the Sol alts. That's what they do. I always say never more than 5% of your Sol in Sol alts. I've repeated that about 5,000 times. Saying it again, 5% maximum. They're very high risky. So if you own 10 Sol alts, the average you're holding will be half of 1% of your Sol bag. All right. Many are new. They're purely speculative projects. Nasana is one that I like. There's a couple of others that I think are very interesting. Jupiter, huge fan because I just love it. It's so good to use as well. And, whoa, Jupiter just popped to 82 cents. It was a 70 the other day. So I will share that chart later. But remember, it'll look ugly because Solana has underperformed. It overperformed Solana beginning of the year, but since all the crap has happened, and also you have to look at Nvidia right now. A lot of hedge funds, I believe, are going to start unwinding that trade too. So I expect Nvidia maybe to have a few headwinds too. So I will share that doc in turn, and a couple more too that I found interesting. I was actually looking at coincidentally this morning. Kiwi Robin, hey honey, I'm back. Welcome back, Kiwi Robin. Hope you're well. I am Colt. Wow, UFC 303. Alex Pereira, that was awesome. 4th of July. You have an awesome 4th of July. The Alex Pereira fight. I mean, left hook from... He threw it from 6 inches away and knocked the guy out, and then head kicked him out. It was just, that guy is scary good. Bitcoin's popping as we speak. Just shot up $200. Thank you. I am Colt, and hope there's a few. I know there's a lot of sports fans here. Stephen on PS4. Should I rather use IDSS or ATR on Sol? Short-term trades, IDSS. I nailed the tops and the bottoms using that tool. Longer term view of where it's going, where it's come from, support and resistance. You can use it too on the 12-hour or the daily chart. It also works too because the more time frame you have, the higher your odds of success. When you're trading on a 5-minute chart, you can be successful for a day. But when you're trading on a daily chart, you can be successful for a month. So remember that. So depends on exactly how fast even you want to trade. Test it out. Do both. Have some practice money on both different time frames. And remember as well, over trading is not good. Wait for those pico moments. Don't trade too much because that will reduce your odds. The more time you have, the more successful you will be. Dog1, happy summer to the community, Mods and James. Another quarter in the books. Yeah, first half of the year is gone. And people think it's been terrible. It's been amazing. Absolutely bonkers. S&P 500 through the roof, Nvidia through the roof, crypto through the roof. Although it may not appear that way because we went so high in the middle of the first half and then came down again, but it's really good. Fitpola, what's the fave IA tool for monthly trading? That would be ATR. That's exactly what it's built for. And Hodlistics, once you've been with IA for a few months, the tools pay for themselves. They sure do. And we just try to cover the cost. So we want people to be successful. And also, if you're using the tools, spend time in discourse. That's where all those questions come from. Literally, the knowledge in discourse. We got some professional traders in there, and everybody's open to helping each other. That's your education. Forget me. And I'm in there all the time too. So spend time in discourse. And thank you for a super sticker. Andy, Glenjo, Viciously, B-Man63, Ball Red, Cern Dragon, Angle Blackson, and Signal 103. That's a wrap, everybody. Thank you as well, Team D Tesla, Sean Donnelly, K8, and Key Robin. So good to see you again, buddy. And Des is here. Des is always here. Des, you're amazing. Thank you all. Have a good Sunday. I'll see you all tomorrow morning. Bye-bye.